Joining us now is Brian Egger, Bloomberg Intelligence, senior gaming and lodging analyst. And, this is interesting, Brian. This morning I was wondering, is there an ETF where you can short the cruise lines? Because I was concerned that, they're overhyped. The demand is overhyped, but it looks like smooth sailing for now.
Yeah, I think that's a fair point. We were a little concerned going to the quarter because Norwegian Cruise Lines trimmed its full year 25 yield growth outlook by 50 basis points back in late April after Liberation Day. Carnival's last print was in late March, so we haven't heard from them since then, but actually they modestly raised guidance. Most of that strength was from the just reported second quarter, but they see a pretty stable second half.
It's a good thing that you didn't short the cruises this morning because you would have lost a lot of money. I want to talk about the group.
Sure.
Because you take a look at the long-term performance. You have Carnival doing pretty well. You have Norwegian doing pretty well. Then you have Royal Caribbean absolutely crushing it over a 5-year basis. Yeah, the chart is pretty amazing. Hopefully we can pull that up. But what explains that? Because I think a lot of people tend to think about the cruises as a block and perhaps trade them that way.
Yeah, I think Royal Caribbean's had a lot of great new hardware. They've really focused on onboard experience enhancements. The truth is all of these companies have. I think Royal has maybe outperformed more recently. But this has been an industry that fairly consistently over decades has maintained fairly solid, at least inflation level yield growth with mid-single digit supply growth.
Dude, look at these numbers here.
It's nuts.
Royal Caribbean up 500%.
Yep. Yeah, certainly from a return perspective, all these companies are at this point targeting low teen kind of returns on invested capital. Royal Caribbean's arguably done a great job getting there quickly.
We don't have much time with you left, but I have a quick question when it comes to these geopolitically fraught regions, how important they are for these cruises. We've spoken with the CEO of Norwegian before. He was telling us that their St. Petersburg line was so profitable they can't run it. When you think about what's going on in the world, how much are these C-suites rooting for peace, basically?
Right. Well, they certainly are rooting for peace, but the geographic diversification of the lines definitely helps. Even the Red Sea cruises to Israel is only 1.5% roughly of capacity days for Royal. So while it's a factor, because they're so geographically diversified with most of that capacity in Europe and the Caribbean, they get a little bit of diversification, helps them in terms of the exposure to these geopolitical events.
All right. Great having you on, Brian. We need to talk, I think, more about cruises.
Definitely.
We have Brian on more because I think it's just a fascinating business. Brian Egger there, Bloomberg Intelligence.